So, good morning. This is going to be another example of the market structure theory I've been talking about. This is an example using the GDP JPY. So, the first thing is to look at market structure. So, when we see things like this, we know that we are bullish, right? And right now, if let's look at this. So, right now, what are we on a weekly? We are bullish, and not only that on a weekly, although this is going to be a little bit advanced. On a weekly, we're bullish, and what again do we have on a weekly? We have the previous day, the previous week has been purged, like the sweep of the previous week. So, so let's say sweep of the previous week. So let's move to daily so we can see clear distribution. So this is what happened. You can see this was the sweep that happened this week has swept last week. Then remember we are still bullish. We are still what? We are still bullish. So daily, weekly is bullish, daily is still bullish. Let's check 4 hours. Now 4 hours is bearish because looking at the structure, you will see, let's write it out. Boom. You see that? So 4 hours is still bearish, and although we don't have a proper swing here to know if 4 hours has shifted, because that is why I can say H4 is mid. It's between main bearish and main bullish. H4, I put it as mid. So we have H4 is mid. So let's look at H1. So now H1 is clearly, uh, remember what is happening here is on a weekly level is a retracement. And remember, the same thing that we discuss on 1 hour to 5 minutes retracement applies to, when you want to check a distribution of higher time frame. You have to check, this is a liquidity. This is where liquidity is being generated to move price back up. So all this engineering of liquidity is happening on all these time frames, both 4 hours, 2 hours, 1 hour, 30 minutes, 15 minutes. So now let's go to 1 hour to kind of have um, higher time frame, liquidity generating. So if you look at it, we are bullish on a weekly, we are bullish on a daily, we're bullish, but we're bearish on. We're still on at the mid level in 4 hours, but in 1 hour, what are we in 1 hour right now? So what are we in 1 hour? So I'm not gonna say it. I'm just gonna show it to you. So in 1 hour, we have shifted bullish. In 1 hour, we've shifted um, to to the bull side. We've shifted to the bull side. Remember, this area here was a sweep of last. That is the last week previous week's candle price was swept. This line you're seeing here. So if I go back to daily, you will see the line even closely. So you can see sweep of the previous week. So it is very easy to see and understand. So this is where the sweep happened. So let's go back to 1 hour. Since we know we are bullish on all time frame, so what we can expect here, if because of the setup, because most of the time, sometimes you will see that the alignment of the market structure theory would vary. Okay. It's not a game that you use your pad and play. It's just that there are algorithm that the market follows. So this algorithm shows us what to do and how to react. So now we are already seeing 1 hour shifting bullish. But remember the theory, how the theory stated, because right now that we have the market being showing us a bull to the side, we don't have a clear uh, we don't have any clear um, uh, anticipation, but we know that the market is going to buy. So knowing that the market is going to buy is because number one, we're bullish on the weekly. Number two, the sweep of last week, previous week candle, the whole of last week price has been swept. So and purging that means that we are looking for a return of origin on the higher time frame. So if I'm to go to 5 minutes to see a better distribution, what will I be looking for? So I will be looking for a sell in 5 minutes. So I'll be looking for a sell in 5 minutes to validate, because if I'm to buy, I according to market structure theory, you have to be able to identify a sell climax. If you're to sell, you have to be able to identify a buying climax. So if I don't see a selling climax around this area, because right now, if this is buying instead of selling towards uh, uh, the projected area, I will not be looking for at all. I will not be looking for a buy. I will not be looking for a buy. I will only look for a buy if I'm seeing a sell. So why am I seeing a sell? So I will be, because number one important area you must look out for is the 2 week open, the 2 week opening price. So if you look at how markets shifted here, so we can also see uh, that market has done some selling. So if I'm to mark it out, you'll see that the market started shifting bearish around this area. Let me mark it up. So market shifted, boom. So now, boom, we have this, boom, we have this. This is where the market is right now. So now I want to expatiate and illustrate what you are seeing right here. So in 5 minutes, we already have a break of structure that leads to, we have a break of structure. You can see, let me take this out so you can see it clearly. We already have a break, can see a break of structure to the downside. Remember, we are bullish. So just the way I explained it in the last class of 2024. So so right now we are bullish, but a lot of people have taken the bait to sell. So now we said, how do we recognize our selling climax if we are supposed to buy? We have to look for a selling climax in the liquidity area where the liquidity is being engineered. So right now we have, how many pullbacks have we been having? So we have this pullback, we have this pullback, and we have this pullback, we have the pullback. So from this, all this pullback, I think the pullback is the premium sell, the premium sell, the premium sell. So now I think if we are to regard this, we're going to regard this as our selling climax. If you look at it the way it's pull, could look at this as our selling climax. So if this is our selling climax, it means that we already have a test. So let me ease off on this one. So this means that this area here is a selling climax. Selling climax. So now we now take this area as our test. There is a buy setup. Now, what are we expecting to see according to everything that we did in class? So we're expecting to see price moving, giving us a test. Now, price has moved, giving us, uh, showing us opportunity to buy, because they are only not going to trap the sellers; they're going to trap the buyers too. So now they're going to do this. Then purge both the test and so now this will become the purge. If you look closely, you will see that the purge went straight below the 2 week opening price. So we'll buttress more about that once we get to the advanced class. So this should give us like a risk to reward of 5 to 1, because this is going to be our entry, the return to origin. So and remember, your stop loss always must go, if you're buying, must go below your pouch. So if I'm going to have my entry here, my stop loss will go below this purge like that. Then could have a 4 to 1 easily like this. Could have a 4 to 1 easily just like that. So let me put it here. Entry. This has not happened yet. So this is not like I'm trying to cherry pick any trade for you. Entry 2025 is going to be, we face it the way it is. Okay. So those that are paying attention will benefit. Those that are looking for a Ferrari trainer will still complain in 2026 because that mirage you're looking at will never happen because it takes serious discipline to be able to accomplish this. So this is the outlook. So also remember, if this is where the break of structure is, this is even a better entry than the first one. Because this will give you a real clear break of structure and all that. So break of structure and comes back to this level, then boom. So you can have it your way. This is not the first entry, second entry, but you've been told. So this is what it is. So this is how to break down top down. So some people have the concept of, if you're trading um, top down analysis, your entry should be 1 hour, 4 hours. And if you're trading top down analysis, you should be, sorry, pardon. So if you're trading top down analysis, some people have the mindset of you have to uh, you have to hold your trade for 2 3 days, you know. But this is how to break it down. This is that daily zone you want to trade off from, that 4 hour zone you want to trade off from, that weekly zone you want to trade off from, can be simplified to 5 minutes, and you will have a clean, sharp move to the destination. So, thank you for watching.